we've moved so far beyond like whether you should buy Bitcoin or not. Like, if you don't have Bitcoin by this point, you're already so far behind.
All right, ladies and gents, we are here today to, we have a lot of conversations in the background, and, some of them are about Bitcoin, most of them are about Bitcoin. Obviously, it's a revolution right now. It's in the media. It's the most relevant topic on the planet, you would say. So what we thought we would do today is, I wouldn't say it's a masterclass, but I say, we're going to break down some of the fundamentals, and we actually come across a document that was written by someone who's a lot smarter than us, who knows, a lot more about this. So we thought we would actually break down this document and have some conversations around some of these things, which basically is going to give you an understanding of Bitcoin on a very basic level. We're not going to go into any of the nuances or anything like that, but we're going to talk about some of the fundamentals as to how it can, maybe help you build wealth, but also what it can do for the world as well, because we think it's quite important. So I'm sitting here with host of the Investors Podcast, Brayden Cook, who's our local expert on all things investing. We're also sitting here with Andy, who is our videographer. He's our producer of the podcast. Now, the reason we thought we would bring Andy on is because he sparks some really great conversation. He's great to have a conversation with. Definitely
smarter than he looks, that's for sure.
But
thanks, Brayden.
None of that on here, guys. Have a listen to me. No, but he also, I think he represents why we're trying to have this conversation. He obviously sees Bitcoin, in the media and kind of, you're invested now as well.
Hard not to when you're around us.
But I think that, the biggest thing is, we obviously have conversation around this, from the questions that you asked. So we thought it would be great to have you on to give a bit of a different perspective to maybe what, myself and Brayden bring as well. So say hello, Andy.
Hi. Yeah, look, I'm a little bit nervous about it, if I'm honest, but
you can tell. So you always look at your phone when you're nervous, right? I want to escape this and be
It was vibrating, so I had to check it. It could have been important. Yeah, so no, it'd be interesting. I hear you guys always talk about Bitcoin, and I don't know what the fuck. I don't know. I honestly don't know what it is. I've got a little bit in it because of you guys, but yeah,
Well, this is good. This is why we're having the conversation. We think it'll be good for you to bring a perspective and kind of ask some of these questions around why it's important. Why do we have the point of views that we have?
I think Bitcoin's one of those things. It's where you read about it, but then you just learn more things you don't know about. So you learn.
It's such a confusing topic.
Yeah, it's like Bitcoin and then the blockchain. I don't know what blockchain is, and then it deregulates. How does it deregulate? So it just seems like it always to be a deeper hole you get into. You read about it.
You have to know a lot about the current financial system and how it all works in order to truly grasp what this thing is doing. And the macroeconomics is really hard to understand.
And yeah, I must preface, there are people out there that are much smarter than us when it comes to this stuff. Honestly, I research probably 2 hours a day on this. Brayden probably does double that, if not more. But and has done for a long time. But I think it's important to have these conversations from our perspective, because if you go and listen to these experts that are up here, they're not talking at your level. And I think that's what I want to do for this podcast. I want to bring this confusing topic up here and try to bring it down to a level where people who they can actually understand it enough to make a decision, not be confused and driven into a hole or just to neglect it. Because I think if you neglect this topic, or even if you make a decision, whatever decision you make, it's going to have massive consequences on your life.
It really will. We've moved so far beyond whether you should buy Bitcoin or not. If you don't have Bitcoin by this point, you're already so far behind, which is scary because this thing moves so quick.
Yeah.
We're already at a point where the price of Bitcoin is it's at 45,000 USD.
I think the scary thing is we're already at a point where government and a year ago people government.
We'll probably never see 35,000 USD ever again.
No.
You think it'll just keep going up?
Yeah.
was it a year ago or 18 months ago? I remember it had a big move in the mainstream media. They weren't really talking about anything deep about it, but it was just, I just remember it, I think it must have hit 20 or 30 grand a year.
Oh, so yeah, back in the end of 2017, it hit the 20,000 mark.
Yeah, and I never...
And then it had the Bitcoin winter, so the crypto winter, which is what they call it.
Yeah.
And then it's just been moving silently ever since, especially after the March 2020 crash.
Yeah.
Since then, it hit 3,000 USD, and then it just has gone on this tear.
Yeah.
And yeah, we're at the point where we won't see 35,000 again, probably, in our lifetimes.
I think, and I also look at it from a network effects lens as well, right? So
that's what it's all about.
We're at a stage now where government are actually considering it. They're actually putting their a year ago, you're sitting around a table. I remember sitting around a table with family and the older generation, and they're like, just blowing it off in a sense.
It's a scam.
Right? Yeah, it's whatever. And now it's like, well, the government are now considering it. The same people that were saying it's not going to happen are now invested in it.
I can pretty much guarantee in the next 4 years, every single government around the world will distribute their own digital coin.
Do you think mainstream medias are told not to go into detail about it?
I mean, probably because their job is to write about things that are going to get views and clicks and that sort of thing, and it benefits them to be controversial.
Yeah.
And so for them to distribute all of the energy FUD and China ban and all that sort of thing, it sells for them. So that's their only narrative. It's whatever sells for them.
Yeah.
But I don't know, potentially. Government want to slow this down because they're so far behind, which is why they're only now just starting to determine whether Bitcoin is a security or whether it's a commodity. Like, we're so far beyond that. They're only starting to look at whether Bitcoin should be legal or not. You're not going to be able to legalize it or to rule it out completely. This thing's here to stay forever. It's like the internet. You're never going to ever close that down.
Will they be able to regulate the wallets? So your Coinbase,
so that's something.
Is that what they can go at?
They can regulate the exchanges, yes, but then you can just move off the exchange.
Yeah.
But because it comes down to taxation for the governments. So they want to be able to obviously get a piece of the pie.
They can get your capital gains though, can't they? Because it comes back into your account. So if I sold and made 20 grand,
you in that regard,
they'll see it come back in and then they get you on the gains.
Yeah. Well, it's like any other asset.
But if you were to, let's say you used exclusively Bitcoin, and let's say hypothetically you had a wallet, we had the money in it, and I was buying a car with it, I was buying a house, or I was buying a TV, which makes more sense. Because it's staying in the Bitcoin sort of, I don't know, marketplace, you're not paying tax on it. Are you theoretically not paying tax? Or they look at your purchases and say...
Anytime there's a transaction, it's technically you are selling out of Bitcoin. So that is a taxable event. But it's interesting now because you have countries coming in saying that it's legal tender. And the way that the US dollar operates, they have to... treat any form of legal tender as its equal in a sense, which means that if Bitcoin becomes legal tender around the world, technically then you can't tax it.
Does that mean, could that help solve countries like Zimbabwe that have completely fucked their...
Absolutely.
So now they're like, well, we've completely ruined, inflated our currency. We've now got a new one that's regulated that we can then start trading globally.
That's the only way to actually fix hyperinflation. You have to create a new currency and a new system.
The only way to counteract inflation is to have something that's deflationary, and that is from a new technology like Bitcoin.
Yeah. So think about it like we're talking about Zimbabwe and any country that's currently experiencing
El Salvador, Venezuela,
hyperinflation, right? Yeah. Anything from that nature, like the only way for them to fix it is to adopt a new system. It's literally, or go, but what Brayden said before, use technology, but they're just not going to be able to do that. Yeah, like they just don't, like it's like, that stuff doesn't appear out of nowhere.
Yeah.
You know what I mean? So they have to adopt a new system. And if you don't have the resources, you don't have the infrastructure, you don't have the skilled labor, that's not going to happen. But this is why Bitcoin is a shining light for so many countries. it does create equal opportunity. It does, create more of a level playing field in a sense, or allows, countries like Zimbabwe, El Salvador, these kind of countries who previously they're playing on a playing field where the US dollar, is really controlling everything. So how do they catch up? Yeah, they can't. They can't because they're playing. It's like they've always, I think about it like sport. Imagine you never had a home game.
Yeah.
You're always playing on someone else's field, right? It's tough.
Yeah.
It's not an equal playing field. So for me, that's the way I think about it in this term. It's like, well, no, now they get a home game. Now they start to get home games.
Yeah.
Right?
Well,
and that's where the thing, because it's not about, the thing is, why does it matter if I play a home game? If I'm a sports team, why is it important for me to play on my field?
Mm-hmm.
Confidence, psychology, right? Like we talk about AFL. Why do people hate going to play in Perth, right? Why does West Coast love playing in Perth? Why is their home game record so great? And it's because psychology. It's because of confidence, right? That is what breeds success. Yeah. We look at Maslow's hierarchy of needs. That is a hierarchy of needs. Of as you achieve one, you get the opportunity to achieve the next. So you can only self-actualize once you have safety, once you feel like you belong, once you do all these things. And really, that's what these countries are missing, right? And Bitcoin gives them the opportunity to step up that ladder.
Well, it's interesting you mentioned hierarchy of needs. I feel like the hierarchy of needs has shifted now that we're in this digital age. You basically have three things that people want. It's education, it's finance, and it's healthcare. Those are the three new things that are fundamental to what help people feel secure. And Bitcoin is the thing that helps them feel secure within the financial sphere.
Indeed.
And there are three areas that are growing rapidly as well.
Would this affect outsourcing? If we had a regulated universal currency and you're outsourcing some products to sort of India or China because you're getting a cheaper rate compared to what we make or what our currency is worth, if you had a deregulated universal currency, would that remove that?
In a way, it will. The way that factors into like salary and all that sort of thing is also your standard of living.
Yeah, sure.
As well, and the amount of skilled labour within your workforce, unemployment, participation rates, and all those sort of things.
Yeah.
So in a way, it will, yes, but in a way, it also won't as well. It all comes down to how much you have happening within your economy.
But it's also, so they're all interconnected as well, right? So countries might outsource certain goods or certain, services or whatever it is, right? And it's almost like, so how do I explain this? I don't know if I have the language for it, but they're all interconnected in a sense. So we might outsource 70% of one thing, but the opposing country relies on that. So that if you take both of those things away, both of their economies collapse. That's why China and America, these countries are probably going head to head at the moment, but they also rely on each other so much, right? So
you look at everything that's happening with Australia and China at the moment, how they're wanting to put ban on how much coal and iron ore that we export into their country, but realistically, the amount of demand has only dropped about 5% or something because they're so reliant on our iron ore because it's the best in the world. So that's not going to go away because we are, as you said, we're so interconnected at the moment with globalization, and that's not going to change. And now that we have a financial system like Bitcoin that is so universal across the world, you get your money basically instantly. It's very, very cheap as well. It goes around regulated banking system and all that sort of thing. It just broadens out and evens the playing field around the world.
Yeah, and it's that evening on the playing field that's so important. This kind of what we were talking about before with El Salvador and these kind of countries. That evening of the playing field is what will allow probably even better trade. It actually makes the world from that standpoint a lot more effective and efficient.
Do you see a future where countries will exclusively use Bitcoin as a currency?
It's hard. I don't know. I think so, yes, actually. With the Lightning Network and companies like Strike that allows payment with Bitcoin, I think, yes, it will eventually over time. It's going to take a while because obviously the US dollar is the reserve currency around the world, and that has the greatest network effect of all time. But because it is so heavily influenced by America and the Fed, I think people are starting to have less and less trust in that system.
Do you want me to just keep asking, going for it with questions? I've got so many.
Well, we might bring it back to thing, and then we can keep going. So we're not just kind of going through anything.
Yeah, it's just stuff I want answered.
Okay, so we've got a document here which was written by Preston Pish, who's someone that we follow pretty closely, Brayden. So I'm just going to read. This is basically, he said, a document he wrote for anyone who has questions about Bitcoin, and then we can kind of maybe, because even some of this is quite, some of the language and these kind of things. So you're obviously got good financial literacy and great and understand the language around it. So we can kind of lean on you a little bit here. So what does Bitcoin intend to solve? Bitcoin was created to put a global digital peg on fiat currency. Since 1971, money around the world has not had a peg. So what does that mean? Just for everyone listening at home.
So the currencies used to be pegged towards gold, and that sort of kept it fairly neutral because it was pegged to something that was scarce. And as soon as they went away from the Bretton Woods system, it allowed governments to print money in order to drive their economies, because the way to do that is through debt. And the more money circulating within the economy, obviously the more it can grow, because they spend on infrastructure, they spend on education, on hospitals, all these sort of things.
Yeah. So gold there's obviously a fixed amount of it, or not a fixed amount of it, but it's obviously exists in the earth.
It still is inflationary in a way. Yeah.
But it was pegged to that, so that it kind of sits against something, and therefore has something that it can be valued against.
Yeah.
And America in 1971 decided to move away from that, which allows them to print money.
The issue with the way that it was pegged to gold is because it stopped the growth of innovation and expanding of economies and that sort of thing. And because the United States had just come out of being successful within the wars and that sort of thing, they wanted to take full advantage of that power that they had created for themselves. And so the only way to do that is to continue to drive that growth, and you do that by printing more and more money.
Yeah. So I'm actually going to pull up a image, which is kind of can show us the Fed's balance sheet. Which the Fed that's where the money the extra money that gets printed gets created. And we're going to. It's actually a image that we're going to put up on the screen so that you can see it. That shows the balance sheet of the Fed divided by the S&P 500 versus the actual growth of the S&P 500, and it's a chart. Which I think this is probably a good time to actually look at that and kind of get an understanding of what that actually means. So I'm going to pull that up, and what I might get you to do is to just dissect that, Brayden.
Mm-hmm. All right, so as you can see on the chart, you can see the red line is the growth of the S&P 500, which is essentially the top 500 companies within the US.
Put into an ETF.
Yes. Well, yeah. Confuse me. And so as you can see from, I think that starts around 2008. So from 2008, it has grown 200% since that point. And you can argue that it's grown because of inflation and assets inflate because of that. But then when you look at it in terms of the growth in the federal balance sheet, which is the Fed printing money, you can actually see that it has a negative return because the Fed has printed that much money. And so the greatest, they coin it the greatest like theft of all time, because you start to look at things like property, healthcare, education. All of these things have inflated to the point where it's become unsustainable, and people can't Like they can't wrap their heads around how expensive it is to purchase your own home and that sort of thing. And that's been a result of the Fed printing money, because when you look at it, they've been printing money at a rate of about 12% a year. And then you add on the 2% inflation target on top of that. So that rounds it out to 14%. And 14% annualized return over that period has caused our dollar to have far less value. Since they've started to do that. And they've been doing this for 40 years, ever since they went off the Bretton Woods. And during the 70s, when they did that, there was massive hyperinflation as well. And so now that we've got technology and all these innovations like Bitcoin and that sort of thing, we've now started to see a lot of goods depreciate in value because of Metcalfe's law and because of Wright's law as well, which basically determines, it says that the more that we innovate and we spend on growth and innovation, the more it brings down the cost of goods and services. And so that's why you've seen things like electronics like TVs become cheaper. We've seen cars become cheaper and all these sorts of things.
Yeah, 100%. So if you're looking at this graph, right, basically, I'll kind of even dumb it down. That next step is that if you're looking purely at the red line, you would say that, yes, the S&P 500 has had great growth, but what caused, and if you look at the balance sheet, what we're talking about is like profit versus debt, or surplus versus debt. So if you actually divide the S&P 500 by the Fed's balance sheet growth, so how much is the Fed, how much has their balance sheet grown, and the reality is it hasn't. It's actually gone backwards. We keep going into more and more debt. I think for every I think we're at 80 trillion or something like that in terms of the economy and the goods and services of the economy, but it's cost us 4 times that amount to actually create that. So if you're thinking about it from this perspective, it's going, well, I'm going to divide how much it's cost us from a Fed point of view to actually achieve that growth. And what you can see is the blue line. Really, if you look at to the point where we have that big drop towards the end at the start of 2020, which was the pandemic, we're actually even. There's been no economic growth. So basically what this is saying is that the growth of the S&P 500 is actually artificial. It's been propped up by the money printing that has happened, which is what we call inflation. Okay, so I thought that was a good time to bring that up and kind of talk about that. So, it kind of does explain what we're talking about, and again, that document that we were just going through. All right, I'm going to continue reading. So this can work over a longer period of time. Have governments around the world will debase their fiat money in order to create growth through financial engineering. It's the classic tragedy of the commons, only between nations with their fiat money. To date, this has occurred via bond markets, which now have no yield on a real basis. I'm sure you've noticed that existing fiscal, how do you say that? Fiscal, and monetary policies are polarizing social classes globally. This is the result of overusing inflationary monetary policies with no monetary peg. Do yourself a favor and Google
the Cantillon effect.
The Cantillon effect, since Bitcoin has a fixed supply of coins and it runs on a decentralized protocol similar to the Internet Protocol or Transmission Control Protocol, it has been forcing fiat currencies to conform to its rules for 10 years now. So, do you want to break down, Braids, just the second half of that?
Okay, so basically what they're saying is that through the use of fiscal and monetary policy, so monetary policy is the use of changing interest rates. Fiscal policy has, it's something that you don't quite see, but it's the government repurchasing bonds and basically putting more money out into the system. And so in doing that, obviously, as he says, it spurs growth, because you put more money out into the economy, which allows mostly companies, because that money tends to go to the top and then trickles down, which is why you see the equity markets and that sort of thing exploding in price, and why you see the richest people in the world becoming even richer, and then the minnows, like your everyday retail people, are receiving their $1,000 payments or whatever.
And a lot of this would have happened during COVID, right? So
and also the global financial crisis as well.
Yeah,
it's only just been stepped up now because they don't want markets to deflate. Essentially, they don't want to see recessions anymore.
So there would have been a lot more, when obviously lockdowns happened and COVID hit, there would have been so many more companies out there actually going under.
Yeah, your ghost companies.
Yeah, that are now
zombie companies.
They've almost been given a free lifeline through what you talked about just then. So that's an understanding of I guess those two terms.
And they want to do that because they want to keep people within their jobs. They want to see unemployment rate. So they have two mandates basically. It's to keep the unemployment rate low, the participation rate high. And they also want to keep inflation around that 2% level.
And so one would argue, right, that this is what Scott Galloway says, you're stealing from future generations. So for me, when I hear that, what I think is there's the old versus the young, there's the rich versus the poor, there's all these kind of I wouldn't say battles, but there's kind of these relationships going on that is causing a lot of the world's friction at the moment. And it's basically coming from the decision that we would, or the mindset, in my opinion, that we would rather not deal with those things now because it's going to cause so much havoc that we'll just keep pushing or kicking the can down the road, right? So what that means is we'll just keep
the reason
artificially propping these.
The reason why they can't do that now is because
we're too far gone.
We're in a debt spiral, essentially. We're at a point now where they can't really taper it because the only way to keep up with that growth and to keep up with that debt, the debt repayments, is to print more debt in order to facilitate that.
Or you just let it go, and then we go into hyperinflation, and then the poor really become really, really poor. And then that's when we have mutiny. That's when we have wars. That's when we have.
And you typically see this at the end of a debt cycle too.
Yeah. So it's going. I don't want to take responsibility. If I'm a leader, if I'm a politician, I don't want to be the one who's responsible for all of this. So instead, we're just going to continue to print money, which makes it harder for the next generation. So instead of leaving the world in a better place where, and this is not, even the people now, I think to the leaders now, and I go, it's probably not even their fault. This is probably something that needed to happen about this about 20 years ago.
Well, the last time we saw at the end of a debt cycle was during the 1920s when you saw the Great Depression, and you saw where that got people, and so they're trying to avoid that at all costs.
Yeah.
And the only way to do that is to print more money to keep people within jobs and to keep the economy ticking over.
And this is the argument that the system is the problem. It's not politicians. It's none of that stuff. It's the system we exist in no longer serves its purpose, no longer, creates equality and allows for equal opportunity, and the playing fields for everyone are so they're so different to what they were 20 years ago. That we're talking on country level, we're talking on generational level, we're talking on all these different levels. That the playing field is just, it's so far from, it's the furthest it's ever been from equal, and it's only going to get worse.
Mm-hmm. Although we will see, because of what's happening now, we will see a massive wealth shift. Especially once the baby boomers sort of die out, you're going to see a lot of millennials and that sort of thing inherit that money. And now that we've got something like the crypto space, we're just going to see a whole lot of wealth come into it, especially when you consider that bond yields are negative at the moment, and you're going to start to see a lot of that move into the crypto space because through staking and yield farming and all this sort of thing, they can get a return like they were getting back in the 70s at 5 and 10% returns.
Can you you need to yield farming and all this kind of stuff. People aren't going to understand.
Yeah, we don't want it. That's a conversation for another day.
But basically what you're saying, right, is when we're talking about yields, we're talking about
the return that you receive on your money.
Yeah. So what do you get? What do you get on a high interest savings account these days?
I couldn't tell you.
1.8% or something, like something crazy.
And bond yields, you're getting even less than that.
Yeah. So you know,
but
when you go to
M2 increases, though, it tends to
what's
geared.
M2?
M2 is the money supply, so
Yep,
that
cool.
the amount of deposits sitting within banks and that sort of thing. The more money that you have of that within the system, it tends to go towards things that are less risky. So that's why your bonds currently have a market cap of around 300 trillion. But we're going to start to see a lot of that shift because it makes more sense to be getting a return on that money. And we will see over time that Bitcoin becomes less and less risky.
I don't even know what a bond is properly. If I'm honest with you.
It's a debt instrument that banks issue.
Yeah.
Basically, the way to sort of grow an economy is to use debt, and in order to basically get that money initially, banks will create these things called bonds or other sort of derivatives and securities. They'll sell it out to corporations, to the public, and in return, they'll get that money straight away, which they can use to spend and distribute via mortgages and that sort of thing. But they pay out a return on that.
Actually, I'll rephrase that. I knew what a bond was, but I didn't know how it worked.
Yeah.
So I know what a bond is, but when you explain how it works, I was like, actually, you know of them and what they do, but to the specifics, I had no idea.
So so basically, what you were saying before with yield farming and these kind of things is that the innovation that's happening in that space, you're getting, you know, some of them are giving 7-8% yields compared to the 1.8 you would get if you were just sitting in a NAB account.
Yeah.
You know what I mean? So the incentive for innovation right now is huge, and you know, this is what happens. This is when we bring all this together, right? When the wealth gap gets that big and the inequality starts to grow to this high amount, or the amount that it is, innovation is what prevails. Yeah, that's what innovation is. It's prosperity.
Deflationary. Yeah. And deflationary tends to, because it's scarce, it'll accumulate, it'll appreciate in value over the long run because it has network effects, which is called Metcalfe's law.
Yeah.
And this is still very early days, obviously, and with DeFi, like there's all the DeFi and NFTs and DAO and all this sort of stuff, which is even further beyond just Bitcoin and Ethereum, which people obviously they've heard of, they don't understand, and that's okay. But have to understand that we're moving so far beyond just owning Bitcoin or owning Ethereum. We're actually building out a whole financial ecosystem that is so much more convenient and so much fairer to people around the world than the current system that we have in place amongst the banks and governments and that sort of thing.
I think it's also to there's also going to be a lot of road bumps. Yeah, like there's also there's like.
Well, I see this period right now as 1995. We've got this new thing called the internet or crypto. And decentralized finance, and we've got all these different protocols being built currently, but there's going to be a day of reckoning where there's a massive crash and a lot of them are wiped out because their use cases haven't been proven or whatever the case may be. But Bitcoin is the internet per se. Then you've got things like Ethereum, which is more of like your Google or your Amazon, which is a company that comes out of that period and takes advantage of network effects and grows exponentially because of it. Because you can build all these certain tools and systems on top of these networks, and just the way that Metcalfe's law works, these things will grow as more and more people use them.
Yeah.
I think of it like this, right? I think of it like Bitcoin being the internet.
Yeah.
So the actual concept of the internet. Then I look at Ethereum as like websites. Right, or something that you build that allows you to build a company on top of it. So and then you've got these other altcoins that come in, which are like a lot of your startups in a sense that are coming in, and these are like we just don't know enough about them.
So the best way to play that field is to act like a VC and you throw a bunch of money, like a net, over it all, and then you're gonna have ones that work out, which are gonna grow exponentially, and then you're gonna have ones that go to zero.
Yeah.
So this is like, it's very risky to obviously throw all of your money into like a Dogecoin, which isn't proven yet. It has no real use cases at the moment. It does in a sense because you have someone who has as much power as Elon Musk, who continually drives it up. But because he has leverage, he can potentially use it in a way that it will have use cases in the future. But it's just so early days that if you're going to be playing that field, it has to be money that you can afford to lose. Awesome. Because the way that these companies grow too, you have to realize that they're going to have road bumps. Like even looking at Amazon and Facebook, throughout their journey, they had periods where they crashed 50%.
Yeah.
But then they've grown back because this thing called networks, we didn't typically realize the power of these networks. Anyone with the idea of Amazon back in the day, they could be just as wealthy as Bezos right now. They just were the ones who sort of figured it out early. But no one knew about network effects back in the 90s. It's only now that we recognize it. And now that we can recognize it, you can recognize that Bitcoin and Ethereum and these sort of things have the same network effect. And it's just going to grow exponentially from here. By 2024, I think it's predicted we'll have 1 billion users. And that's what scares the government
of Bitcoin.
It's growing 2 times faster than the internet was back in the 90s.
Yeah.
2 times. So it's being adopted. So think about the internet and what where we're at right now with the internet.
Yeah.
And Bitcoin is being adopted at twice the rate.
Throughout those years, at an annualized rate, the internet was growing at 68%. Bitcoin and crypto is growing at 113%.
Your theory is that this will help increase the wealth globally, right?
Mm-hmm.
But how does it differ from shares where people that have more money currently can buy more of the Bitcoin? Therefore, as it increases, those people just hold their wealth, which is fine. But how does that spread the?
You just have to get your hands on it, though.
Yeah.
Because this thing will grow exponentially. So it's like getting into Amazon early days.
Mm-hmm.
It's not because again, what you got to understand is it's not about. Yes, people who hold more Bitcoin will get richer, but the reality is because these can't be more printed, it's about they were in.
Yeah.
Yeah, so that's the opportunity. If you get in early and you add value to the network, which is network effects, you will get rewarded. The later you come in, right, and that it's because it's about the artificial, we just looked at it, right?
Yeah.
S&P 500 artificially inflated. That will never happen in Bitcoin.
Mm-hmm.
So the rich will never get richer because some person keeps making mistakes.
But you've got to, so the way to then flip it around to sort of maybe understand a little bit better is because they are printing money so much more, the power of your dollar becomes less and less. So the amount that you can purchase with your dollar becomes less, which is why you look at things like housing and that sort of thing as being completely unaffordable now. But that's only because the purchasing power of the dollar has decreased over time.
Yeah.
With Bitcoin, that is going to mitigate that because it's a deflationary asset. And so because it's deflationary, it means that it's going to accumulate in price. It's going to appreciate in price, which holds its value better than the dollar does currently.
Yeah.
So instead of your dollar becoming less worthy, it just continuously becomes, more valuable, which means that, if Bitcoin appreciates at a greater rate than what housing does, housing will actually become more affordable as you invest more and more in Bitcoin.
I get that.
But then Bitcoin has more, so the reason why Bitcoin's going to grow more than what property will, for example, is because it has a lot more use cases.
Yeah. Will Bitcoin get to a point where it'll sort of taper and start to be more consistent in its price? Or?
Yes.
Okay,
yes,
so
it will.
Volatility is the next thing here,
but that only happens because because of the law of big numbers.
Yeah.
So you look at something like Amazon, it's far less volatile now, but that's because it's approaching a $2 trillion market cap.
Yeah.
So the same thing will apply with Bitcoin, and it has been getting less and less volatile.
Yeah.
Back in 2013, we saw drops of like 60, 70%. Now in Bitcoin, we're seeing drops of say 30, 40%.
And it's your perception of volatile. $10,000. The movement of 10 grand to me is probably going to mean a lot more to someone that's got a lot more wealth.
Exactly.
Where to them that doesn't make as much sense.
Exactly. But once you start to see money coming from big institutions, they don't tend to move in and out of positions as quickly because to big institutions, it's about preserving wealth, as opposed to trying to accumulate wealth.
And they've got boards and these kind of things, decisions.
So they move slower.
It's not like, for them to make a decision, it's probably a 2-month process. They're dealing in, they're investing sums that are like
billions and billions of dollars. Whereas for us, we can be nimble, and like you look at a price drop, you're like, oh shit, I can sell out. Cool. They're going to hold throughout those periods.
So you guys describe Bitcoin as the internet.
Yes.
Ethereum as a website.
Well, it can be. Ethereum
as a platform on the platform.
It's where you build the platform.
It's still a company.
Is there a piece missing then? Do you see like another coin coming, or is there something that brings it all together?
100% there'll be new protocols that come out that will potentially eclipse all of them. But the way that things work, there's better things than Google. Like there's new social or search engines that are coming out now that are better.
Yeah.
But because Google was the first one, it has that network effect, and it's hard to do that because network effects have this monopolistic effect to them. So they accumulate more and more and more. And so once you have the throne, it's very hard to relinquish those because monopolies are just that way inclined.
And it's important to realize the way people make decisions. People don't make decisions about brands they love. They make decisions on brands they think are going to be the least disastrous.
Yeah.
So the greater the network, the more people that are in that network, because that's how humans work. Yeah, we buy things that we see other people buy. Yeah, like that's why I buy Nikes over, say, some company that has no name that I've ever heard of before, because I'm like, that runner might look better. It might say they have better features, but I know my friends have this one and they say it's really good.
Yeah.
So you think about Apple and...
Apple's the greatest example of it, because once they get you into the ecosystem, like once you've got a phone, once you've got a MacBook, then that's when you get a watch. That's when you start to use their iTunes or the music facility. That's when you start to use more and more of their services. Once you encapsulate it into that environment, you're basically going to stay there because you like what they provide you.
So I just want to add to that before you go to the next question. So that's 100% true. And think about it, right? Like Android phone, or is it Google? Samsung. I don't even know. So this is
Android.
Android. They have their cameras better. They have all these better features, but people will still stick with Apple because they know what they're going to get.
Sure.
And Apple have already won their hearts, and all their friends have Apple. Like I often say this when I teach. Who's the weirdo who doesn't have an iPhone? Yeah. Do you know what I mean? Like, and no offense to anyone that doesn't have an iPhone, but like, if someone doesn't have an iPhone, it's actually weird. But in a sense,
does Bitcoin have that user vulnerability? So, for an example, would be Nokia used to be the beast, right? And everyone had Nokias, and then Apple came along and took that market share.
No, so that argument applies to altcoins.
Okay.
Because Bitcoin is the internet.
It's the structure.
It's the structure.
Yeah,
it's the foundation.
It's not a product, it's the structure.
It's not a product, it's the foundation.
Yeah, okay.
And so everything is being built out of that.
Okay, cool. I see.
Bitcoin will be because the internet, the actual protocol of the internet hasn't changed since it was invented.
Yeah.
It's exactly the same as what it used to be.
Yeah.
The innovation happens on top of it.
Exactly.
Yeah, okay. That makes sense.
Yeah. And so yes, you are going to see winners in the altcoin space. Can I point to which one's going to be the winner? No, not yet. It's too early.
Yeah.
We will probably see it over the next 7 to 10 years, but now it's anyone's guess.
There's been cases of influencers and YouTubers pumping and dumping coins.
Well, and that same thing happened back in the 90s during the .com bubble.
Yeah, okay. Yeah.
Like Pets.com was generating absolutely no revenue, but they built it up to over $1 billion market caps. You're seeing the same thing now with like Nikola and all these other companies as well. But they're not proven yet. And when they're not proven, the risk is just ridiculous.
So price volatility. Yes, it is for now. This is the new form of currency, and the current market capitalization is very low relative to existing fiat currencies. So this is what you were saying before, Brayden, where if you actually look at the market cap of Bitcoin, it's got a similar market cap to Apple. Or like a company.
No, it's less.
Yeah. It's less than Apple, but it's got when you think about a company versus a currency.
That's why it can be manipulated so much now.
Yeah, you look at the US dollar versus Apple, right? We know a lot more people are using the US dollar than what they are Apple.
Mm-hmm.
So that's kind of how you need to think about it and why it's so volatile. As a result, you get volatile swings. Additionally, the Bitcoin protocol has a 4-year cycle based on game theory incentive structures used to execute fiat currency. The cycle is straightforward, and it's important to understand why the volatility peaks every 4 years. To better understand this cycle, please read the following paper. So we see this, right? Bitcoin has, it literally chops in halves every 4 years. So, that's something that if you can get a grasp of those cycles and why they actually happen.
This may be the last cycle though, because now that we're getting institutional investors, they have a different way of investing in assets. They have a much more professional approach, obviously, and they're less, especially if we start to get the big hedge funds who hold positions long term, they're not going to be selling out of positions that are potentially worth 10 billion, 20 billion, 30 billion, because that's just not the game that they play. They play hold long term. So we may not see, this comes down to the volatility argument. We're going to see less and less volatility as this thing continues to progress.
Yeah, 100%. And I think the thing that scares people is what you said before with volatility. Like Bitcoin, is currently at $45,000 US, and people see a drop of 10,000, and they see the drop as 10,000 instead of seeing the drop as maybe 10 to 15%. Now, if you're on the stock market and anyone invests in stocks, I've seen companies that I own drop by 15%.
Well, it's why companies like Apple do stock splits, or Tesla just recently did a stock split. It's because the psychology around it. You're not going to invest in a company that's $3,000 when you can invest in a company that's only $100.
Yeah.
And so that's why people tend to look at Ethereum perhaps in a better light to Bitcoin, because Bitcoin's trading at such a high value and it will never split in price. And so that's where, you have these things where you think, oh shit, it's dropped in price, I've lost so much money. And because of the psychology around that, we tend to want to sell when there's fear and that sort of thing, when you should be doing the opposite of that.
And I think people, and I looked at it like this until you speak about it, is that people look at buying Bitcoin as you buying shares, but you're not. You're buying an infrastructure. You're buying a system.
Philosophy.
Yeah, exactly. And that's how you speak about your companies compared to how you speak to Bitcoin are completely different. You're like, when I hear you talk, or I ask you questions about shares or markets, you're like this. When you talk about Bitcoin, it's different because it's a completely different platform.
Not even, because I still look at companies that I invest in as companies.
Yeah.
Whereas people see them as a price on a screen.
I see what you mean. Sure.
Whereas for example, I am invested in Square, for example. They've got tens of thousands of employees who are working every day to drive this business forward, and they're innovating and they're creating new products. And they've got their own network effect going on with the Cash App and their payments infrastructure. I'm investing in the business itself. I don't care what the price is, because that's not what is relevant today. And so if we bought into a company now and you don't look at the price for a year, most of the time you're going to be surprised to see that it's actually gone up. It's the same premise with property. You don't go and have your property valued every single day. You're not looking at the price of your property every single day. But that's the issue that we have with stocks, is that you can see the price every day, and it is so emotionally driven that we make our decisions based on emotion rather than actual sound fundamental economics.
So how much does a price of a stock determine if you invest in it? Does it have any sort of, you look at it obviously, but
yeah, you want to be investing in something if you think that it is a good value, but it doesn't. You're better off buying in a company that is a little bit more expensive, but you believe to be a wonderful business that's going to grow in the long term.
And we've discussed this
and
before.
you often get caught out because you think, I'm going to wait for there to be a drop.
Yeah.
And then it drives up another 20%, and you say, oh shit, it's too late. Yeah. And people say the same thing now about Bitcoin. Oh, it's too late. It's already up to $45,000, and you think, oh, I've missed the boat. I'm going to wait for the next one.
Yeah.
But little do they know that it's going to drive up to 200,000 or whatever, and it's never coming back down to this price ever again.
Yeah. And we discussed this before. When you look at a company, I remember we're talking about Square 5 or 6 years ago. I was at Melbourne Uni campus. And you start to see them around the place. Fucking things, because I was working in hospitality at the time. I was like, "What are these? It's Square."
Yeah.
And my mindset wasn't that's innovation. Go buy into that company. But I knew, I was like, "Oh, this is this is nuts. But my thought wasn't to go and invest in it.
But that comes down to your second and third level thinking.
Yeah.
You know, you need to be thinking beyond just like, oh, there's this cool thing that I've started to notice around the place. But you think the way that I sort of see things is that's a way for me to, like, I want to get in on the ground level. Same thing with the iPhone. Like, same thing when the iPhone came out. Like, you started to see everyone started having iPhones. And you're like, oh, this is cool. The way I think is you get in on that company early on, and then it'll profit over the long term.
Yeah.
100%. Okay, so there are a million Bitcoins. There are a million crypto coins. Why Bitcoin? First, remember Bitcoin is an open source, decentralized protocol. When studying how protocols reach mass global adoption, you need to understand network effects over communication channels. Although Wikipedia isn't a protocol, it can serve as an example. Anyone could copy the open source code for Wikipedia, change the name, and then try to adopt new users and overtake Wikipedia as the global source of the internet. This doesn't happen because of network effects. Bitcoin has the strongest protocol network effect for pegged money. And then they go on to talk about an article. So Wikipedia is a great example.
It's got a brand, you know, and you associate Wikipedia as this thing that you can go to for wealth of knowledge. It makes no sense to build something now because it's already got a monopoly on that.
Yeah, and that's what you were talking about before with the monopolistic. Fuck me. We're not even going to go there, but it's got a monopoly on the wealth of knowledge because it has the network effects.
Yeah. And so you look at they have an unfair advantage because they've got data and they've got the users.
Yeah.
And data is the next oil rush in a way, because they can use that data in a way that prevents them from being dethroned.
Yeah. And so when we talk about network effects, we're talking about as you add someone into a network, it actually becomes more valuable. Not because
Facebook's the best example of a network. It's probably one of the best network effects out there, because as soon as you get yourself onto that network, it becomes exponentially more valuable. Yeah. Because then you invite your friends onto the network, and then you invite your friends, and they bring their businesses onto it, and then advertisers come onto it, and it just spreads that way. And now it reaches 2 billion people around the world.
It's not about the virality, right? Like, I think that's important. It's not about the virality of the network. It's about the infrastructure within the network of how people interact and how one person adds value.
Value, yeah.
You know, Facebook is a good example. Telephones are a good example. One person who has a telephone, the network's not valuable at all because you can't call anyone.
Yeah.
But the more people that have telephones, the more valuable the actual network becomes. Mm-hmm. And it's the same with Facebook. The more friends that you have, and that's really what they do. You know, I know that Facebook had a retention metric, and their retention metric was that if you had 14 friends in 10 days, they knew that they would retain you. So then all of a sudden what they do is they build the technology to make sure that you have 14 friends in 10 days, and therefore that's how they retain you. And, you know, once you have other friends on, it's much harder to leave, right? It's quite interesting how network effects works, and that's what Bitcoin has right now. It's like, you know, the user rate is growing at an exponential rate, and if we think of it like the internet, you know, we mentioned it before, Bitcoin's growing at almost twice the amount that the internet grew at back in the 2000s and the 90s. So, you know, we're looking at a technology that's had the greatest network effects that we've ever seen. And, you know, there may be something that may one day overtake it, but right now, nothing even looks like coming close.
No, it really doesn't.
Yeah, I always remember when talking about sort of the markets and networks. I remember apps. If I hear a new app from 3 different people, it's like, you know, you just know it's no. I might personally get it, but if you hear 3 different people speak about an app, you're like, that's a new app. It's going. It's like how many times you see the same fucking like God of War app or like ad for an app, you never buy it, but as soon as you hear people using it, that's your instinct to get onto it and start using it.
Mm-hmm. Okay, so there is...
You see it everywhere too. Like Fortnite's the same. Fortnite only became successful because the more users that it had on the system, the more valued it became.
Yeah.
You know, and you see it everywhere.
And that's the thing about Bitcoin. and I've never thought about it until you said it, and it sounds ridiculous saying it, but you've never seen an ad for Bitcoin or anything like that because it's...
But it has such a powerful brand, doesn't it?
Well, no, it's the nodes in the network that do the advertising. That's why, that's why Bitcoin, that's probably why we're doing this now. The reality is that we believe in the philosophy of Bitcoin. That's why we tell you about Bitcoin. We think that it could help you.
Yeah.
And that's the key thing to understand here. When you're invested in the network because you believe in its philosophy and you understand what it can do for the world, you're going to try get other people in the network. One, because it helps you as an individual. Two, because it helps your friends and family. Right, that's what drives us to actually do the advertising for it. That's what network effects is.
Yeah.
Because remember, the network itself becomes more valuable when we add another person in, right? So that's why Bitcoiners will always try to get others in because they believe in this philosophy. So people who don't understand the fundamentals of Bitcoin, therefore aren't going to advertise Bitcoin because they don't think it can help the people around them.
And they're the ones who then also say that Bitcoin has no value, has no intrinsic value, because they obviously have their own beliefs around it and that sort of thing. But it's the people like us having these conversations which is the value within the Bitcoin network.
And it's funny, right? Like, you look at the conversations and how people have these conversations, and you can start to see exactly what we're talking about. Who are the people who don't want this to succeed? Well, they're probably 60 years old, invested in gold.
All of their money is tied to the dollar.
Yeah.
So you can really and who are the people who don't want this to change? Well, it's not the fucking poor people. Let's be fucking honest here. The poor people aren't sitting here and saying, "Nah, don't go on Bitcoin." Again, it's the rich people, it's the old people, it's
the ones who have all their money tied to the US dollars or whatever like that. But it's the ones who are down the bottom end who are getting ripped off because you're starting to notice that your electricity bill's gone up, or the cost of your grocery shop has gone up, or whatever the case may be. They're the ones that the printing of money actually affects, and they're the ones who see inflation eat away at their purchasing power.
Yeah, it's interesting like that, isn't it? Because my friends and I don't really talk about Bitcoin, but now I'm working with you guys. I bought into it. And now it's seeped into them. I sent them a screenshot before of Bitcoin, and we didn't talk about it. Because you hear about it, but then it takes a personal sort of engagement. So it's like a conversation with someone in your sort of...
And the beauty of it is, right, these big downfalls that the skeptics come in and say, yeah, well, we told you so. Look at it. It dropped 50% tomorrow.
Yeah.
And if you understand fundamentals of Bitcoin, you're rubbing your hands together and you're saying, great, this is another chance now for another big wave of people to join the network. Bitcoin, people who understand fundamentals of Bitcoin aren't worried about the price. They're worried about the network.
Yeah.
For me, when the price drop happened, I was a little bit nervous. I remember sitting in my bed next to Liv, and we were going, wow. Like,
you were getting on the phone to me, going, like, what do I do here?
But guess what? I then got a call 20 minutes later from my auntie and uncle saying, hey, we need your help. We want to invest in Bitcoin. Liv's dad then invested in Bitcoin, and I'm going, fucking hodl. Like, hold, right? Because the network's growing.
Yeah.
You got people who I was sitting around a table with previously saying they would never invest in it. It's not. All of a sudden now, this is their chance to get in. And as long as you see that network growing, that's all that matters.
You could see that on the on-chain analytics too. So a lot of the people who were selling out when the price crashed, or what caused the price to crash, was a lot of whales. So people who have over 50 Bitcoin or whatever. And the people who were swallowing up those coins was your everyday retailer.
Yeah.
They might not have been buying 10 Bitcoin, but they might have been buying 0.1 Bitcoin, or whatever the case may be, whatever they could afford. But all of that supply now has been swallowed up, which is why we're now starting to see the sense again.
And there's more people.
Yeah.
So, the one thing is...
And this is why we talk about the wealth gap shrinking, because it's more of the retail traders who are getting in on the ground floor of this thing. And once the big guys with all the institutional money come on, there's hardly any supply on the network because it's a scarce asset with only 21 million in supply. Once they come on, there's no Bitcoin out there for them to swallow up. And so that's what's going to cause the price to surge.
Why didn't they? Why?
They can't, because
it doesn't,
the way that hedge funds operate, they have to have meetings. They've got their own rules around it, so they have to rewrite their rules. And these sort of processes take months or years in some cases, because they're not looking at putting in $1 million. They're looking at putting in $10 billion.
And they must know, though.
And it's not their money. It's pension funds.
They're sweating. Sure, like we can, like the hedge funds, the big businesses that aren't
They're
involved.
sweating because all of their money's currently tied to bonds, which are negative yielding.
Yeah.
So the one thing I was going to say before as well is, when do you buy more? Like, okay, so if you're someone who comes in and you don't have a lot of knowledge around this, what you're doing is when you see green, you want more, right? So those little bits that people gone in and said, yeah, I'm going to put a little bit in, right? As soon as they start to see a little bit of, I guess, success or a little bit of growth, they go, okay, well, I'm going to put a bit more in. And that starts to grow.
Skin in the game is the thing that you need to have initially so that you can start to get a feel for the fluctuations and the nuances of being invested in an asset where you can see the real-time value at all times.
Yeah.
Once you start to see it work out, that's when you start to go bigger and bigger,
cool.
which is why I often emphasize dollar cost averaging. So just constant, like once you get your paycheck every week or every fortnight or every month, get a little bit out of that and put in what you can afford, just like you would put money into your savings account. Do the same thing with this thing, and you'll watch it grow over time.
And I think people would be deterred from that because they would see how expensive Bitcoin is as a product. They'd be like, it's so expensive, it seems irrelevant for me to put in small amounts, which is
when
not
you
the right mindset.
and I think this is why this conversation helps, because when you understand inflation, you're like, well, I'd much rather my money being in Bitcoin, which will get me, well, on average it says, what is it, 100% a year or something like that over the last couple of years.
Bitcoin's been growing at 200% a year since it first came out.
Yeah, so when you understand that, you're going, well, if I keep my money in cash,
which is being diluted down at 14% a year,
I'd much rather use, even though Bitcoin price is going up, I know I'm going to get a return on it, right? And that's because people don't understand inflation. They just see that
it's an inflation hedge, and that's why people often say it is a hedge towards inflation.
All right, so governments will never allow it. Really great kind of topic that we're going to finish on. So during the early years of protocol growth, this was a major concern. Today, the opposite is occurring. You have state governments like Wyoming already passing legislature to protect Bitcoin holders. Additionally, you have countries like Germany, Australia, South Korea, and many more already passing laws to protect ownership. And they've obviously done a podcast this on We Study Billionaires as well. So this is kind of what we were saying before. Like a lot of people and a lot of the arguments at the moment is that government are going to regulate, and they will. There will be.
We know it's coming, so the best thing to do in that regard is to just sit back and let it happen, because the thing with government, like they're still pondering whether it's a security or whether it's a commodity. And again, it's already moved so far beyond that. We know that regulation's going to come because wherever there's money to be made for the government via taxation. And you start to notice that the regulation that they try to put in place or the FUD that they put out is purely to try and slow it down so that they can sort of catch up. But it's just moving so quickly that they're falling behind, and which is why we start to see, like here in Australia, the Reserve Bank is looking into building their own currency or their own digital token through the Ethereum network. The only reason they're trying to do that is to try and get on board and be a part of the narrative. And we'll see it, probably every government will incorporate this over the next 4 or 5 years. And that'll be a way for them to basically do without monetary policy. Like, so the Fed will sort of vanquish, the RBA will vanquish here in Australia because they'll just be able to supply they'll be able to control the supply of the digital tokens that are produced out into the network, but they're going to need help from a private organisation in order to do that.
But what about banks in the sense that if I open my NAB account...
so the government will probably be the ones who control the digital wallet.
Yeah.
So they'll partner up with a private organisation, like we're seeing with Facebook, how they've got the DM token. It'll be someone else that they'll have to partner up with, and they'll benefit from the offsites of those transactions, and they'll probably control the digital wallets and they'll control the supply of it. But again, it's regulated. So it basically is the same as what is currently out there with the general dollar at the moment.
Am I right in saying this, though? In order to regulate it, they then have... the only reason they would want to regulate it is because they want to adopt it, right? And they want to adopt the technology from it, which again, you can regulate it, but if they do regulate it, they're almost saying that we accept it. And when they say that we accept it, the network exponentially grows, which is what we're seeing now, in a sense. We're seeing America, creating legislation around it. And now, if America's creating legislation around it, that means they're considering it. And a year ago, they weren't. And I think that's the biggest thing here, is that regulation will come, but don't look at regulation as a negative.
It's a positive.
It's actually a positive, because it means that it's becoming more adopted at a larger scale through governments and these kind of things. So you can look at regulation and be like, oh God, like what does this mean for Bitcoin? But again, it's like, can you regulate the internet? Well, you can, but you can't stop the power of it, and you can't stop what people do with it.
Mm-hmm. And there is a weird political discourse going on with regulation and big business now as well in other areas. I don't know how it'll affect this, but sort of conservatives they don't believe in regulation when it comes to just regulating companies, but at the same time, they don't like the idea of not losing their free speech on Twitter and stuff. So it's a weird sort of one hand, what do you really truly believe in it? Because you deregulation, but you also believe in having an open platform. So how?
Yeah, and that's the biggest thing. Like, in China, what we're seeing is that they can really regulate, right? They can really go hard on it, but that's a cultural thing, right? In America, in Australia, you can't do that. Yeah, there'll be uproar. Like they just can't do that. And it's already past that point where they can come in, and if they try to ban Bitcoin, it's like, man, there's 1 billion users. Like, what are you going to do, right? You're going to chuck them all in jail? You don't have the space for that in jail. You don't, what are you going to do? You're going to fine them? The wealth gap's already too big. No one's going to pay their fines.
I think you're underestimating, though. I see you looking at this as like, they're falling behind, and the governments and private industries and the very wealthy are falling behind this. But I think we're kind of, they will have another way, I think we'll see another sort of, I don't know how to articulate this, but they will try and maneuver again to try and get it on top of this. It won't be successful.
Them getting on top of it is, again, their ability to tax it, because they don't care about anything else. Yeah, like what they really want out of it is to make sure that they get their slice of the pie. Right, that's it. So that's all they care about. So as long as they get their slice of the pie, that doesn't mean that it's not going to be successful. It just means that they'll get their slice of the pie. But the fact that it's actually a decentralized technology means that they'll only get their slice of the pie, and they can never increase that slice of the pie. Right? Because again, the more use case for Bitcoin there is as a decentralized technology means that as long as you're in the network, you have the utility that comes with Bitcoin, which is freedom, right? And that's the philosophy at the core of Bitcoin, freedom, more than anything. Because as long as you're in the network, you get that utility.
And there's no way for them to shut it down either, because there's no company that they can go and say, hey, you need to shut this thing down. It's on nodes all around the world, so it's on your computer, it's on your phone, it's on servers. There's no way that they can shut it down unless they shut down technology altogether. Or they shut down the internet altogether, which again they can't do.
Because it spirals them. They want economic growth. So there's that dichotomy of wanting an economic growth but getting their slice of the pie. So that's why at some point they're going to have to be forced to adopt this thing. And then that's when it grows exponentially.
Exactly.
So
and which is why you're starting to see governments put it on their balance sheet and starting to say that this is legal tender. The bigger countries will be the slowest to adapt because they've got the most to lose.
Exactly, and the smaller countries will be the quickest to adapt.
Which is ironic.
They've got the most to win.
Which is ironic because you think that a country like the US or Australia or Germany or whatever the case may be, they would probably be the biggest winner if they were to get on it early.
But they don't want to, because then it means the people in charge of the country have to become a little bit poorer, right? That means that the assets that has and
well, they lose the greatest network effect of all, which is the US dollar.
Exactly, and that's how they made their money. So there's fear there. So you know what they say? This is a Warren Buffett quote, and it's actually going to be used against Warren. When there is fear, be greedy, and when there is greed, be fearful. Right? So there's fear in those running the country at the moment. So that means if you're on the other side of the coin, get greedy.
But there's a lot of change as well, and it's all coming together at the same time, which is why we're seeing so much discrepancy in people's thoughts and that sort of thing. But what people need to realize is these sort of things aren't going away. It's here to stay for good, and you just have to adopt it.
Yeah. All right. Well, so ladies and gents, we really hope that was. I guess it just gave you some insight and some clarity. We're not saying that you need to go and do something right now. We're just trying to provide information that allows you to make better decisions with what you do, and kind of provide an insight into something that is quite unknown at the moment. It's something that it's a conversation that we wanted to have because, we talk about this shit in the office all the time. Like, Andy's asking questions as he does, which is great. It's good questions lead to great answers. So, we really hope you enjoyed this episode. This is the Investors Podcast. This is where Braydos does his thing. As you can see, he's the expert here. He's the one who can kind of give us all the real terminology, or the understanding of what the terminology actually means. We're going to kind of continue the narrative around helping you guys build wealth through providing information that allows you to make better decisions. So really hope you enjoyed the episode. Make sure you subscribe to the channel, whether you're listening on a podcast or listening on YouTube. We really appreciate it. It's the only reason we get to keep doing this. So the more support that you throw behind us, the better the guests we can get on, the more power we have to go and equip you guys with the tools to make better decisions. So really appreciate it, and we'll see you guys next week.